metallurgical coke, and Gujarat NRE Coke is one of the manufacturers. In fact, they were one of the companies petitioning for this kind of a protectionist measure to come in. And if this is indeed true, it could perhaps help them. Take a look at that stock. When it's only a 4 rupee stock, Nigel, but well, it doesn't take much for it to hit a 20% move.
And that's right. You know, Surabhi, if you take a look at it, this has been a petition that's been filed. It won't be very good news, remember, for some of these companies, you know, who don't have their coke oven. So that's why we're seeing this big reaction. The stock, remember, it has a big debt, etc. But it's one of the beneficiaries because one of the people who have gone ahead and complained about this. But some of those companies will get hit, and one such company could be Kalyani Steel as well. We're currently joined by Mr. R.K. Goyal, who joins us on the line. Mr. Goyal, thanks so much, sir, for joining in. Before we talk about your numbers, this is a recommendation that's come in increasing, you know, the duties on imported met coke. Your first take on it, could you give us a sense? What is the current price of met coke that you source domestically? And also, could you tell us, if it's coming from out, what's the price difference currently?
Good afternoon. First of all, only 15% of the coke production in the country is by merchant cokeries.
Okay.
And they are quite inefficient, technologically obsolete. They are not at a proper location because they were not set up to cater to the local market. They were largely set up to cater to the European market once upon a time.
Correct.
And when the situation in Europe is not good, they are not able to sell. They find it difficult to survive, and hence this application for dumping. Now, definitely $25 cost will have an impact on our manufacturing cost by around $15–16 per ton. And companies like Kalyani Steel, which are all mid-sized steel plants, they are largely dependent on coke from local merchant cokeries as well as importing. As local merchant cokeries cannot meet the demand, will get affected to this extent.
All right, Mr. Goyal, you know, let's get in a couple of names then. Who are the domestic manufacturers of coke? Now, if this is the case and if this is actually accepted, then they'll go ahead and increase their coke prices, which will not be very good news for you all. And can you all push that through as well? Could you give us a few names? Because Gujarat NRE Coke, you know, that stock has not really been a stock that we've looked at for years. But do you buy any kind of coke from there? Are they still supplying coke in our markets?
Yes, they are all supplying to us.
Which are the other names, sir?
There are many. There are Satwana, there are Soras Fuel, Bhatia, there are several.
All right.
But then most of these cokeries are technologically inefficient.
Okay. And
hence their manufacturing costs may be higher.
So, Mr. Goyal, just the math now, because what we learn is that the anti-dumping duty would be $25 per ton for coke that was coming in from China and $16 per ton for coke that was coming in from Australia. What was the current price at which you were sourcing this coke? What was the local selling price? What was the differential? And what will the net impact be if these duties actually come into place?
Okay. Current coke price is around $300 per metric ton. It has gone up already from around $115 in February, March to $300 now. So last 2 months, there is a substantial or sharp increase in coking coal as well as coke. And we definitely buy from all these companies. Their price is import plus. So depending on the demand and supply, they price their product. And we definitely pay them premium as we are able to source locally.
So if the duty is in the range of $16 to $25 per ton, how much of a hit is that going to be? And by how much do you think that your cost actually goes up?
You see, our cost will go up at least to the extent of around 1,500 rupees to 2,000 rupees per ton, depending on the quantity each company is consuming.
Is the market elastic enough for you to pass this on? Do you think you'll be able to pass it on, or will you have to take the hit?
You see, we are already struggling to increase, to pass on the increase in coke cost from $115 to $300, and over and above this additional burden. So this is going to affect all the mid-sized companies who does not have coke oven.
All right, Mr. Goyal, let's talk about your numbers then, sir. You know, on the top line, we did see a bit of a growth. It was up only around 4%. What are the volumes and realizations?
Actually, volumes were marginally lower, basically because of the subdued demand, and there is no anti-dumping or MIP on our products.
Yeah.
You see, most of the other products are covered, but then engineering steel or LR steel long products are not covered, and hence we had a dampening effect on our volumes.
All right. So the volumes were down, sir, by how much on a year-on-year basis?
On year basis, around 5%.
5% lower. All right. And also, sir, could you tell us, input costs have been going up. Coke prices, as you're telling us, it's likely to go up even higher. I know prices as well, they have seen a bit of a jump in the last couple of months. Now you've done margins of around 22%. How much lower can you go from here because of these prices? And you're not being covered under any of these protection measures as well. So do you believe that 20% as well is doable for the next quarter, or do you think it's going to be difficult to hold on to it?
We are keeping our fingers crossed. We have taken up this issue with our all major customers, and we are quite optimistic that they will be able to increase the price.
All right, sir, final question then. Give us some guidance for the remainder of this year. What kind of numbers can you do? A lot of your investors, the stock has moved like a dream from around 120 to around 330. So that guidance is going to be very important for the remainder of this year. Could you tell us that? I believe you made some efforts on reducing your debt as well.
You see, we have already reduced our debt substantially. We hardly have any debt. At the same time, our efforts are there in controlling the cost, as well as we are quite optimistic that our customers will be able to give us increase in price. So we will like to keep our fingers crossed what best is possible.
Okay, all right, Mr. Goyal, thanks for joining in.